Welcome to Tendency Forex. We will bring you the latest Forex news. US dollar to Japanese yen has rebounded last week on the better US dollar sentiment, and the comments from BOJ Governor Kuroda would have certainly helped. He strongly pushed back against the idea of any imminent shift in policy stance, arguing that it was too early to examine the policy framework specifics and that the benefits of the current monetary stance still exceeded the costs. But the angst over the sustainability of YCC is on the rise again. It is notable that in this very recent risk-off episode with 10-year USD bond yields drifting lower, that the 10-year JGB yield remains right at the top of the 0.00% to 0.25% trading range allowed under YCC. Foreign investors appear less concerned over an end to YCC given the fall in global yields over the last month. In the week to 18 November following the US CPI print the previous week, foreign investors bought JP2.2 TRN worth of Japan bonds, the largest weekly total since the week ending 9 July 2021. The large buying by foreign investors must have been offset by domestic investors selling given the limited drop in yields in recent weeks. Higher angst over YCC is therefore less about the global backdrop, which would be more consistent with some drop in the 10-year JGB yield. The 10-year USD bond yield has declined from a high of 4.24% in late October to the current level a little over 3.50%. That near 75 BP drop has resulted in no drop in the equivalent yield in Japan. We are of course approaching the time when Prime Minister Kishida will announce his nomination for governor of the BOJ to take over from Kuroda. This could be announced at any time from now through February. The coming change is adding to the speculation of an end to YCC. The inflation data in November was also much higher than expected. The nationwide core CPI year-over-year rate jumped from 3.0% to 3.6%. The BOJ's favored median-weighted CPI year-over-year rate jumped from 0.5% in September to a record 1.1% in October. Contractual cash earnings on a 3-month average annual basis hit 1.73% in October, the highest since 1997. So the fundamentals are beginning to stack up, and if wage pressures were to be evident in the spring wage negotiation period, it would strengthen the case that the inflation objective of the BOJ has been met. While we do not expect any change to YCC before Kuroda leaves the BOJ, the speculation on change is likely to persist, and in our view is another factor that we believe will limit the upside for US dollar to Japanese yen during bouts of broader USD strength. Risks will increasingly point to the downside for US dollar to Japanese yen as we move forward. If you enjoy this, don't forget to subscribe to our channel.